Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, I'm going to show you all some in-depth perspectives from the CYPRX private community, showing you all how you can incorporate the information that we provide here in the CYPRX private channels to scalp Bitcoin or utilize the information for dollar cost average positioning. If you all enjoy these video breakdowns, do us a favor, smash that thumbs up button and subscribe. Stick around for the entirety of this video breakdown. It's going to be jam-packed with a lot of fundamental information and technical analysis breakdowns to show you all how you can use the information that we provide to your benefit. So let's jump in. We're going to talk about the delta zones. We're going to cover fundamentals, and then we're going to break down price action and how and why Bitcoin was bullish today temporarily for the New York session and how you could have taken advantage of this, whether you are a day trader trading on a leveraged account or plugging in dollar cost average positions to potentially see an appreciation in your long-term holdings. So first, we're going to overall understand what has been driving demand for risk assets over the past couple of months. If you haven't watched any of our previous video breakdowns, that has predominantly been due to the weakening of the US dollar, driven by the expectations that the Federal Reserve is going to cut rates sometime in 2024. That has weighed on the dollar overall, which has also been driven by weakening economic data and lower inflation readings. So just to cover that out of the way, that narrative has yet to be completely faded out of the market, where from previous readings of Fed rate cut expectations of around 88%, that number has dwindled down to roughly around 42 to 47%. So the market is still hoping on some type of rate cut expectation. Today, we also had some fundamental factors playing into dollar weakness towards the beginning of the session. We had the overall New York session. Here's the data that came out today. The U.S. Automatic Data Processing, or ADP for short, has reported a slowdown in labor demand. The U.S. employers also hired only 107,000 workers in January, which significantly was lower than expectations of 145,000 and the former reading of 158. This built sell pressure on the US dollar. We're going to cover this as well and how you could have used all these fundamental factors along with the technical analysis that we provide here at CYPRX to take advantage. Now, this data overall created a risk on market mood for the first half of the New York session, given the fact that in the next couple of hours, we have the FOMC release that could potentially change. But right now, I'm going to show you how you could have used this information and the fundamental breakdowns in the CYPRX private community that we give in advance to your advantage. So folks, first, we're going to focus on the improved risk sentiment. Now, I typed out this analysis to the CYPRX private members in advance just a couple days ago. You can see here, here's that crypto breakdown that I give to the CYPRX private community to tell them, overall, the macro breakdown and what they should be paying attention to via fundamentals in order to trade in whatever direction those fundamentals create, whether that be a positive direction or a negative direction. And here you can see one thing that I mentioned: in order for Bitcoin to be bullish, I said right here, for any significant price appreciation in Bitcoin, what we need to see is an improvement in risk on market mood, right? So that was essential for today's buying opportunities on Bitcoin. Again, the CYPRX students have this information in advance. And as you all can see, given the bad economic data that we saw today, which was weak ADP employment data, improved the overall market mood. You guys can see this fundamental here, that although this fundamental is on forex, we had an improved risk sentiment today during the beginning of the New York session, which drove strength to risk assets, keeping in the back of our mind that the overall scenarios and fundamental catalysts that have been driving risk asset demand has been the expectation that the Federal Reserve is going to pivot from their tight monetary policy stance, starting to cut interest rates, which has weighed on the dollar overall. So we've been playing this divergence between the dollar and risk assets for some time now. So that's confluence number one that the CYPRX students could have used to their advantage by reading these fundamental pieces that I give to them in advance to play out scenarios in their own portfolio on crypto. All right. The second thing that we're going to show is in the private CYPRX monthly membership program, one of our CYPRX mentors gives out delta zones. And well in advance, you can see the date here, Tuesday, January 30th. So this was an entire day in advance at 8:33 a.m. one of our mentors gave out some buy deltas on Bitcoin. You can see those levels here. So we're going to get into the technical analysis aspect and how you can implement this into your trading regime, whether you're a dollar cost averager or you're a day trader actively trading on a leveraged account, to your advantage. So having this information in advance, step one, what you need to do is you need to go plug these delta zones onto your chart. So that way you know where they exist at in the market. Then all that's necessary for you to do is be patient. This is going to lead us over to the charts to break down price action, keeping in mind that we had an improved risk on market mood, which tends to drive strength for riskier assets. Remember, the fundamental awareness is you have to layer your trade. You have to layer reasons as to why you're taking a trade in the market. So if we're going to be bullish on Bitcoin, or i.e. risk assets, we need to have an improved risk on market mood. That was number one. That's the first confluence, that foundational understanding of why money is moving into risk assets, okay? Whether it's for intraday trades or whether it's for long-term holdings, that's predominantly why we saw an increase in Bitcoin. So we need to have that fundamental understanding, all right? Now, let's go over to the charts real quick. We're going to expand Bitcoin real fast. These are the Bitcoin charts we're going to stay on the 5-minute chart. As a matter of fact, we'll go to the 10-minute so price is a little bit cleaner while we're talking about this. But overall, this green circle is where our institutional scalper yesterday put out the Delta Zone information. You can see 8:33 a.m. Tuesday, January 30th. How that correlates on the chart, you can see roughly around this area was 8:33 a.m. Tuesday during the New York trading session. So we had this information well in advance, which takes me to these confluences. These are some CYPRX confluences that I teach in the private community, things that we do not do and things that we do here at CYPRX. Number one, we don't buy at highs or chase bullish price action. So looking at this previous move, i.e., where we saw this bullish extension on Bitcoin, creating a higher low in comparison to the previous, and this extension move up, this is where our institutional scalper put out buy deltas to be paying attention to. So going off of this first confluence that we pay attention to here at CYPRX, which is we do not chase bullish price action, we can assume that this was our range that we were operating in comparison to where previous banking institutions were buying from, i.e. at these lows here, and then facilitating more orders into the market here. So anybody that was looking at the markets yesterday and paying attention to the CYPRX private community knew not to be buying from highs, given the fact that we had buy deltas from lower demand regions, right? So that's one of the confluences that we pay attention to here at CYPRX, is not buying at highs, being patient, and waiting for discounted opportunities from previous demand ranges, right? Hopefully that's clear. All right, let's go to the second one. We look for previous areas of interest where banks bought from. So I have my session indicators turned on. You can see New York session, Asia session, and London session, all indicated by these vertical lines, right? So if we go down to the bottom of price action, we can physically see where New York session was buying from here in this area. We can see where London session was buying from here in this area. And we can see where Asia session was buying from here in this area. Now, in the CYPRX private community, I tell the students and teach them in the 2.0 material how to identify areas of interest using higher lows as to where we could be potential buyers from if price comes back down at the discount. Utilizing that information, it was clear and simple to see, highlighting these areas that this is where we would want to see price come down into a discount from, just going off of this second confluence. We look for previous areas of interest where banks bought from. So we don't buy at highs, and we wait for price to come down into a discount. So that means we want price to come down into at least at a minimum of 62% discount from this previous area where Asia was buying from, London was buying from, and New York was buying from previous sessions before we start to facilitate capital into the market. So that was confluence number 2 from the CYPRX 2.0 material side of things, okay? Number 3, we trade with the higher time frame order flow. Obviously, of course, I don't need to show you. Hopefully, if you've been involved in crypto, you know that crypto has been predominantly bullish since pretty much October of last year, when the whole entire rate cut narrative from the Federal Reserve started to trickle and make its way into the market, driving demand for risk assets. So that's confluence number 3. And then number 4, to solidify all of that, which is kind of the same as number 3, we trade with the macro environment. So there's still an expectation that the Federal Reserve is going to cut interest rates, which has driven demand for riskier assets. And then also today, I just went over, we saw that dwindling economic data, i.e. the ADP coming out weaker than previous, and the employment data improving market mood overall. So those four fundamental factors and technical factors from the CYPRX confluences that I particularly try and attempt to get the CYPRX students to pay attention to all supported potential buying opportunities on Bitcoin today. So that's just one factor that we give to the CYPRX community as to how to read price action. Again, not buying at tops, identifying previous areas of interest from where banks bought from previously, slapping on the delta zones, waiting for price to come down into discount, which we gave in advance, trading with the higher time frame order flow, which we know since October has been bullish, right? So that means that every single time that Bitcoin's come into discount, given these pullbacks that it's had, it's flipped around and turned back bullish. And that's yet to change as of right now, right? And then we trade with the macro environment. That means that any dwindling economic data that weighs on the US dollar, we know most likely, again, it's not guaranteed, but most likely does what? Supports buying of riskier assets. And we got all of these things today. Not buying at tops from where we previously let out deltas, identifying discounted areas, trading with the higher time frame order flow, and trading with the macro environment, considering the dwindling economic data that we got the first half of the New York session, right? So all of those things out of the way. Now let's get into the technical analysis aspect of things. Knowing that price is discounted and knowing where these delta zones are, you can see, just clicking this open for you all, it might be hard to see on the screen, but we can see the deltas were the 42786 and the 42616. Now, how that correlates over to the charts, you can see 427862 and the 42616. So price pulled back and came into a discounted area from where banks were previously buying from. If we take our Fibonacci from where this New York session was buying to where this New York session at the beginning of their session started selling, i.e. this A to B move, taking our fib from the low to the high and extending that over. Remember, manual retail traders on the internet, on YouTube, on Twitter will tell you that this tool, this Fibonacci tool, is some type of tool to gauge where price is going in the future. They'll make these outrageous price predictions using these Fibonacci extension levels and call it some golden scenario sequence bullcrap. That is all jargon. This tool is a tool to simply measure where discounted or premium price is most likely going to be. And you can see, having extended this fib from the low to the high, price came down into our discounted area that we look for here at CYPRX, which I told you all is a minimum of 62% from where previous banks were buying from, which could come all the way down to 100%, which would give us the best RR ratio. But what we want to see is a minimum of 62%. We don't want to be buying at highs, right? We want to be buying at least 62% discount from where previous banking institutions were buying from, which would be down here at this area, roughly around $41,800 per Bitcoin, okay? So that's now confluence number 5, considering all these other confluences that I gave you guys previous, right? Price is now at a discount, along with price coming down into the deltas. Now let's get into fractal price action. So we'll jump down to the 5-minute chart, keeping in mind that today, the risk on market mood improved due to dollar weakness. Now let's go over to the dollar charts. We have the dollar charts on the right-hand side and Bitcoin on the left-hand side. So these are the bullish confluence these are the bullish confluence today that I was paying attention to looking at Bitcoin's price action. Here we can see at 3 a.m. Pacific, prior to the New York session, when London is rolling over into New York. This is where our manipulation window starts to exist in the CYPRX private community. We can see that market makers started to sell positions even further heading into New York. And at the same time that dollar started to weaken, we saw Bitcoin started to increase. Now, I want to take your attention back to the fundamental overview that I gave to the CYPRX students on crypto. And I said to them, in order to see Bitcoin appreciation, we need to see dollar below the 104 psychological level. So that was another confluence that we got. Dollar remaining below the 104.00 psychological level. And again, going back over to the charts and zooming out, we can see that previous to this on Tuesday, we saw the dollar fail to break above the 104 and start to depreciate in value. So that was another extra added confluence that the CYPRX students had in their back pocket to say, okay, this is another extra added gem as to why we could see an appreciation on Bitcoin. Number two, an improved risk on market mood, which again was delivered to us by the dwindling economic data that created a temporary sell-off. And I say temporary because we don't know how the FOMC speech and meeting is going to affect the dollar in the next couple of hours, which created a temporary sell-off on the US dollar during the beginning of the session. Now, that information you can see here came out at 5:15 a.m. Pacific and 5:30 a.m., where we had the ADP come out lower than expected and lower than previous. And we had the overall employment come out lower as well, right? So that came out, all this data came out downbeat today. And you can see the timestamps at 5:15 and 5:30 a.m., how that negatively impacted the dollar. Significantly enough, right now we're going to get into the technical aspect of Bitcoin. You can see down here at the bottom of my charts at 5:15, right? So here's 5:15 and 5:30 a.m. on Bitcoin. It's the same exact time that the bad economic data came out for the US, creating downwards pressure on the dollar, right? Which was the same exact time that Bitcoin started to create the definition of bullish order flow, which here at CYPRX, what we look for at and around these deltas is a violation of the deltas, a dip beneath the deltas, bullish order flow matching previous bearish momentum, signaling to us that buyers are potentially back in control, and then a failure swing low in the market, i.e. sellers failing to overpower buyers, buyers overpowering sellers, and creating bullish structure. So here for the first time, in correlation with the time increments that the fundamentals came out bad for the US dollar, weighing on the dollar, was the same exact time that Bitcoin created a higher low, higher high formation, right? So now we have a new range to trade from on the fractal price action of things. So now we're going to go over to Bitcoin. Hopefully you guys see that correlation. So bad fundamental data from the US creating sell pressure on the dollar, dollar below 104. Overall, the higher time frame breakdown that I just gave you guys, where we weren't buying at highs, we were waiting for Bitcoin to come down into the deltas or previous discounted areas from where banks bought from the previous days, right? And then waiting to see how price reacts around these deltas and these discounted areas fractally to get in on scalp positions or bullish moves to deliver us sound risk to reward ratios, all right? So now let's extend this price action. Now that you all know that this higher low, i.e. indicated by this green circle right here, is exactly where the US data came out at 5:15 and 5:30 a.m. All that was left to do, obviously, of course, piecing everything together that I've given you so far, was say, okay, now let's look at structure. Here we can see that this previous bearish market structure, i.e. these lower highs here and these lower highs here, have now been violated by this bullish move. Now we are operating in a new A to B move, given the fact that sellers have now exhausted themselves. If sellers were still in control, when this data came out from the US at 5:30, it would have most likely come out strong for the US dollar, prompting dollar strength, and sellers would have created a new lower low in the market in comparison to the previous lower low, lower high, lower low, lower high, lower low formation. And we would have seen a continuation in the bearish move. We did not get that. We got the inverse. We got the definition of bullish order flow. You need to be able to pay attention to this on the drop of a dime, right? So now let's look at number 4. Obviously, of course, we have the violation of the buy delta to the downside, buyers coming back into the market, failure swing low, i.e. the market makers creating a new higher low in comparison to the previous, and a new swing high, i.e. the definition of bullish order flow, a high, higher low, higher high formation. So number 4 is a bullish push through the buy delta, breaking previous bearish market structure. You can see all of this bearish structure here and here had been violated. Number 5, all that was left for us to do was sensibly, or if that's even a word, logically, that's better, interpret an area for us to enter in at a retest or a discounted area for a good risk to reward. So again, using our handy dandy Fibonacci tool, which is not a tool to measure where price is going, it's a tool to measure where discounted price is most likely going to be. If we know that this is now our new A to B move to operate in, considering the fact that we just created a new higher low, higher high formation, all that was left for us to do was take our fib from the low to the high, and you can see that price came back down into our sweet spot of 79% discount. This is where you use your risk to reward profile to gauge that you want to enter into the market at a discounted price. So not only on the higher time frame did I just show you guys, right? Let's go to the hourly. Not only did I show you guys that on the higher time frame, which should be another confluence that I added to that white set of confluences, which is we look for higher time frame discount, but not only were we not buying at highs, waiting for price to come down into a discount, but now, given the fact that this was the previous bullish move on Bitcoin, we are now in a 70% discounted area on the higher time frame, and on the lower time frame, we are in a 79% discount from where previous market makers were buying from this fractal bullish extension, right? So this gave us the green light to say, okay, now we can place a good RR, that means safe stop losses nice and tight beneath this low, or even safer stop losses beneath this low. Why would we be doing that? Because what would invalidate this bullish move? That's what you have to think about. What would invalidate this bullish move is if price made a new lower low. So that means that if price came down and did something like this, that would invalidate this bullish move that we are projecting to take place on Bitcoin. So that's why you would place your stop losses beneath these tight lows right here or these safer lows here. And simply all you're doing is you're targeting previous highs. So a 1-to-1 on this trade would have been if price came up and extended itself above here. Targets number 2 could be any previous lower highs here in this area or any lower highs here in this area. All right. Those targets were met. Nice 1 to 2.5 to almost 1 to 3 RR, depending on where you put your stop loss. And this is a perfect example of how you can use all of the information inside the CYPRX private community to either dollar cost average into positions on Bitcoin, or use this information to leverage trade Bitcoin, obviously, of course, at your own risk. I'm not giving you financial advice, not telling you guys to go out there and do it, but I'm just simply showing you all how throughout fundamental understanding, sound technical analysis understanding, and using the information that we give to our community days and hours in advance, you can use this to your benefit. Okay. So anybody that's on the Zoom call, do you have any questions from this trade breakdown? This is honestly a super clean example of why you should be paying attention to the fundamentals that we give and why you should be paying attention to the updated deltas, even if you're just a dollar cost averager, right? Seeing that our institutional scalper gave these delta levels a day in advance after price had extended itself up to almost 44,000 again. If you were a dollar cost averager, all you had to do was literally set up buy limits at these delta zones and just be patient. That's it. That's all you had to do as a dollar cost averager.